Right here. So let's bring up one of those mid-caps on your screen. Elecon Engineering, the stock off the lows of the day, but still down about 4% in trade. The market's not too impressed with Q4 earnings on that counter. YOY, it's been a weak quarter, but sequentially, if you see, there's been a significant jump in profits as well as revenue. Let's connect with the management. PV Patel, the chairman and managing director at Elecon Engineering, joins us on the phone line. Morning, Mr. Patel. Thank you for taking the time. If you could take us through the highlights of the quarter, and then, of course, we'll also talk about the merger of Elecon EPC. Mr. Patel, if you could hear me, I was just asking about the highlights of the quarter gone by.
Basically, this quarter has been a substantial jump in turnover compared to the last 3 quarters. Our operating revenue, our total income was 414.7 crores for Q4 FY16 as compared to 464 crores in the corresponding period of the previous year. The EBITDA stood at 74.5 crores as compared to 84.2 crores in the corresponding period. The EBITDA margin remained similar at 18% for quarter 4, and the net profit stood at 28.4 crores as compared to 31.7 crores in the corresponding period. The earnings per share stood at 2.61 as against 2.91 over in the last fiscal period.
Mr. Patel, this is Hiral on this side. As you mentioned, in terms of our margins are concerned, on a standalone basis, the margins have come in at 18.7% as against the 23.9% on a year-on-year basis. So we have seen a dip on a standalone basis. And on a consolidated basis, we have seen an expansion close to by almost 974 basis points on a year-on-year basis. So if you could just give us a breakup in terms of the domestic as well as the international business as to how the margin picture is panning out.
Well, the margins keep on varying year on year because of the product mix that we have. Because Elecon in the gear business has a very wide variety of products, and therefore it depends on the product mix. The domestic margins have been relatively much higher than the international margins, and though we have ensured that the international business that we do is now on the verge of improvements because there are a lot of cost-cutting measures that we have taken, and so the foreign subsidiaries are all now become PAT positive in the last 4 quarters.
All right.
Right. Mr. Patel, you also booked 2 large-scale orders in the naval defense space. What are these orders, and what is the kind of revenue recognition from these orders?
530 crores is the total order inflow from the Indian Navy. This is basically for the gearboxes for frigate battleships, which the Indian Navy is going to produce. These are of stealth nature, and they would be delivered from 2019 till 2022.
Mr. Patel, if you could just tell us in terms of, how has this, the Navy business, as you mentioned, what's the kind of revenue contribution that you are looking at? Because earlier also when we had spoken to you, you did say you would be increasing focus in this space. So what's the market share that you are looking at in the Navy space, and by how much will, your contribution be in terms of our revenues are concerned?
It is very difficult to say what is the market share in the Indian Navy business because it is year on year and it is going project wise. So it is difficult to mention that. However, I can tell you that the margins are reasonably good or better than our regular business that we do.
Right. Mr. Patel, let's also talk about the merger of your unit Elecon EPC into the main this thing. What's the rationale behind this move? What's the metric? What's the share swap ratio?
EPC, which is the material handling company, is getting merged into Elecon Engineering, which is the parent company, the gear business. And we see a good rationale in this because this would consolidate the two companies, and we would have economics of scale. And going forward, we see a lot of synergy in doing so. The board has just approved the merger. However, the rest of the procedures are yet to follow.
All right.
Going forward, we believe that this will strengthen the organization further, as well as improve the margins on a long period term.
All right, Mr. Patel, we'll have to leave it at that. Thank you for joining us this morning. So that's the management of Elecon. It's a strong quarter sequentially, but some concerns on the stock there YOY. They've also merged their EPC unit into the main company. The stock down about 4.3%, 4.4% in trade right now. We'll take a short break here. Up ahead, exclusive views from Ajay Singh.